Hey everyone, welcome back to Corporate Decoder, the place where we dig into company secrets and uncover the real story behind their filings. Today we're peeking under the hood of Creative Medical Technology Holdings, Inc., a company operating in the biotech space. Get ready because this report is more than just numbers, it is a narrative of their journey over the last 9 months and a glimpse into their future. And if you are into breaking down these corporate documents and getting straight talk about what it all means, make sure you are subscribed. Also join our growing community on Discord, linked in the description below. So this is their quarterly report and update on how Creative Medical Technology Holdings Inc. has been doing. They're telling us about their financial condition and the results of their operations for the period ending the 30th of September 2025. Looking at their balance sheet as of the 30th of September 2025, they have total assets of about $5.8 million. That is down from about $6.6 million at the end of 2024. A big chunk of that is cash, which has decreased from around $5.9 million to about $5.3 million. Their inventory has also dropped and their prepaids and other current assets are down significantly. On the other side of the ledger, their total liabilities are pretty low at around $261,000. That is good. But here is where things get interesting. Their stockholders' equity, as of the 30th of September 2025, it is about $5.5 million. This is down from about $6.3 million at the end of 24. This decrease is largely a result of the company's net loss for the period, which we'll get to in a moment. Now let's dive into the statement of operations. For the 3 months ending the 30th of September 2025, they reported a net loss of over $1.2 million. That is a bit worse than the same period last year when the loss was just over $1 million. Looking at the first 9 months of 2025, the net loss is substantial at over $4.1 million. This is also an increase from the nearly $3.6 million loss in the same 9-month period of 2024. The company's revenues are very minimal in these periods, just $3,000 for the first 9 months of 2025. This means most of their activity is focused on research and development and general operations. Research and development expenses for the 9 months of 2025 were about $1.7 million. This is down from about $1.9 million in the prior year. The company states this decrease is because their Allostem Spine chronic lower back pain trial is nearing completion of patient recruitment. However, their selling, general and administrative expenses have jumped significantly. For the 9 months ended the 30th of September 2025, these costs came in at nearly $2.4 million compared to about $1.8 million in the same period last year. They attribute this increase to higher marketing expenses and the timing of bonus payouts. This leads to a total expense of over $4.1 million for the first 9 months of 2025. When you combine this with their minimal revenue, what you get is a substantial operating loss. And earning per S-hair are deeply negative. For the 3 months ending the 30th of September 2025, it is a loss of $0.48 per S-hair, and for the 9 months, it is a loss of $1.72 per S-hair. This reflects the ongoing investment in their scientific and development pursuits and the limited revenue generation so far. The statement of cash flows tells us where the cash is really going. For the 9 months ended the 30th of September 2025, they used over $3.9 million in cash for operating activities. This is despite some adjustments like amortization. This indicates that their day-to-day operations are consuming cash. However, their financing activities show a significant inflow of cash. They reported over $3.3 million in cash from the exercise of warrants. This is a common way for biotech companies to raise capital, especially when they are still developing their products. They also bought back some treasury stock, which cost them about $10,000. This exercise of warrants is a key event. On the 6th of March 2025, they entered into agreements where holders of existing warrants exercised them and in return received new warrants. This brought in about $3.7 million in net proceeds after fees. The funds are earmarked for working capital and general corporate purposes. Digging a bit deeper into warrants, we see that as of the 31st of December 2024, there were over 3.1 million warrants outstanding with an average exercise price of about $20.30. By the 30th of September 2025, new warrants were issued, bringing the total to over 4.1 million. The average exercise price of all outstanding warrants is now closer to $16.32. This means the company is issuing more shares, but at a generally lower price per S-hair. The company's main business revolves around developing novel biological therapeutics in several fields, including immunotherapy, endocrinology, and neurology. They're working on treatments using reprogrammed stem cells and also have products like Cavastem and femcells for erectile dysfunction and female sexual dysfunction. They have various licensing agreements that are important for their intellectual property. For instance, they have an ED patent that expires in 2025 and they've been amortizing it. They also acquired a patent for treating lower back pain and have various payment obligations tied to milestones like clinical trials and FDA filings. These agreements are complex with cash and stock payment options. Their ImCells platform focusing on immune cell reprogramming is a significant part of their strategy. They have a licensing agreement for a patent related to this, which involves upfront fees and ongoing royalties. The company has a 2021 equity incentive plan which allows them to grant stock options and other awards to employees, officers, and directors. As of the 30th of September 2025, they had granted over 11,000 stock options. Stock-based compensation for the 9 months of 2025 was about $3,485, which is quite small. Under their stockholders' equity section, there is a share repurchase program approved in 2023. They are authorized to repurchase up to $2 million worth of their common stock. In the 9 months ending the 30th of September 2025, they repurchased 5,000 shares, costing them $10,000. These are recorded as treasury stock. Looking at subsequent events after the 30th of September 2025, things continued to be active. On the 25th of October 2025, they entered into more warrant exercise inducement agreements. This involved holders exercising existing warrants and receiving new ones. This transaction closed, bringing in about $3.8 million in net proceeds. Roth Capital Partners LLC acted as their financial advisor and received fees and a warrant. Interestingly, on the 4th of November 2025, they repriced some of these newly issued warrants to $2.86 based on the volume-weighted average price. This shows the volatility and dynamic nature of their financing arrangements. In the management's discussion and analysis section, the company provides more color on their operations. They describe themselves as a commercial stage biotechnology company focused on innovative therapeutics. They highlight their various platforms and therapies, including ImCells for immunotherapy and Allistem for chronic lower back pain. They've been working towards clinical trials and regulatory approvals for several conditions, including type 1 diabetes and lower back pain. They list key milestones achieved, such as the FDA clearance for their type 1 diabetes in application and positive follow-up data for their stem spine pilot study. They also mention receiving orphan drug designation from the FDA for the treatment of brittle type 1 diabetes. Revisiting the results of operations for the 9 months ended the 30th of September 2025 compared to 2024 revenues are very low and essentially flat. Cost of goods sold is also minimal. What stands out is the rise in selling general and administrative expenses. Research and development expenses decreased slightly overall, but they mention an increase in costs related to their Allistem spine chronic lower back pain trial as patient recruitment continues. As for liquidity, they had about $5.37 million in cash and US Treasuries as of the 30th of September 2025. They also reported positive working capital of about $5.15 million, which is a decent buffer. However, the net cash used in operating activities was significant at nearly $4 million for the first 9 months of the year. This means they are burning cash. Now for our take, Creative Medical Technology Holdings Inc. is clearly in the high-risk, high-reward biotech space. Their financials show a company heavily investing in research and development with minimal current revenue. The substantial net losses and the increase in selling general and administrative expenses in 2025 are concerning. However, the consistent efforts in securing patents and advancing clinical trials for conditions like type 1 diabetes and lower back pain are important and show a clear strategic direction. The warrant exercises demonstrate their ability to raise capital, which is critical for their survival and continued development. The constant stream of subsequent events, especially regarding warrants and their pricing, suggests a very active financing strategy. This can be a double-edged sword, providing necessary funds, but also potentially diluting existing shareholders significantly. The company appears to be making progress on its clinical pipeline, which is the core of its value proposition. The success of these trials and subsequent regulatory approvals will be the ultimate determinant of their future. For now, it is a story of investment and potential, not immediate profitability. Alright, that is our breakdown of Creative Medical Technology Holdings, Inc. Its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.